Apologies for starting a little bit late today, but this is our update look at what's going on in the markets. I should say as well, I think we are having a couple of issues pushing out notifications to this via the Capital.com app. So if you're a client and you're not getting them, I don't think anything's changed, but I think to make sure you get notifications when we go live, when we put up new content, all of that sort of stuff, then just subscribe to the channel. Subscribe to the channel on here on YouTube. Click the notification bell thing to the side of subscribe, and YouTube will send you a push message when we've gone live. We'll just leave that risk warning up for a bit. It's been an interesting week, I think. There's quite a lot to look at. I think we've seen a volatile week for stock markets. I think what was interesting was where markets stopped yesterday, US indices anyway. We saw them run out of steam ahead of, I think it was last Friday's highs. So we'll have a look at that in a bit more depth. But I think Bitcoin's been interesting. You know, I think as I said in the past, I'm really not a fan of the cryptos, but only because of the cult-like mentality you see around them, you know, but where people can't believe they're not going to be worth $1 billion one day. But I think the move in Bitcoin has been interesting, clearly, over the last 6 weeks. And we did a video this week just looking at where it might top out. And I think it's all about trapped buyers. So let's take a look at that first. Then we'll get into the other markets, because I think, you know, it has clearly been a mover, the old Bitcoin. Let's flip this over to a daily chart. So again, you know, for me, treat it like any other market. There is no magic when it comes to trading more volatile markets like the cryptos. Let's get rid of the RSI for now. You know, for me, it's all about price action. I mean, you need to have wider stops because clearly they are a lot more volatile. I mean, just today, the thing has moved more than 10% by the looks of it. I mean, it closed. Where did it close yesterday? It closed at 786, and it's touched 6.5. So it's moved 20% since yesterday's close. Just a normal day in Bitcoin trading. So you know, it is very volatile. So clearly, you need to give the market room to move around. But it all started with this break back here. You know, we'd had really dull crypto markets in the last couple of months, in the first couple of months of this year. For me, no reason to pay any attention to them. And then in April, bang, off we go. Start breaking through these old highs. We didn't get a massive sell-off, so it starts to look like a valid break, and bang, we've just built on that. But I think for me, what is interesting, looking at market psychology, and it ties into, there's a longer video on our channel from a couple of days ago. But the obvious levels to look at is, well, you know, where is maybe not so much the pain in the market, but where are we gonna see the parabolic move stop? And I think logical areas to look at are previous highs and lows. All the people, you know, who bought in, you know, maybe on the way up in that mania at the end of 2017, who kept the faith and were trying to buy, or were buying through 2018, only to see it plunge. You know, so there's a lot of people, if they're still holding, will be sitting on either large unrealized losses, or kicking themselves at the profits they gave up, you know, on the way back down when the thing touched 20,000. So I think it's interesting when we look at previous highs, like this one from July. You know, 8.5 was clearly a big level, and so far at least, it's proved to be the case again. You know, so I do expect maybe a bit more back and forth at these levels. If we can get 8.5 cracked, then I think the next major hurdle is 10. You know, and 10,000, big psychological level anyway. But for me, even though it's sold off like an absolute nutcase, which of course Bitcoin always does, I still think that recovery is still intact. So for me, I'd still be, you know, going into next week, when maybe the dust has settled a bit from this week, be looking to see, right, well, do we see some stability, and do we see some buyers come back in? So perhaps the thing I'd be looking for is why can't I draw these trend lines properly? You know, is maybe looking at this old trend from down from down here. It's definitely a Friday trend line, that one. You know, it's okay. 6.5 was a bit of support. I think it'd be interesting for the rest of the day to see how it performs. Do we see a bit of support building, 6.5 to 7,000, to give us maybe a trading opportunity for next week? So I don't think we've seen the last of the strength in Bitcoin. That's what I'm saying. The last couple of days we've pulled off a bit. Clearly, when the price has doubled in 6 weeks, we're well overdue a pullback. And we know when they happen with Bitcoin, everyone heads for the exits at the same time. So, but for me, going into next week, be looking to see the strength come back. Let's see what happens. So that's the old cryptos done. Right, let's get back to more traditional markets. Let's look at the US markets. Let's look at the S&P 500. So we'll look at the S&P, we'll look at the Dow, Nasdaq, then we'll come back to the European markets. It's all about trade wars at the moment, isn't it? The threat of trade wars or the tariffs and what's going to be done, and tweets from President Trump. So it has been a pretty volatile week. Let's just go back to the hourlies. So we started the week. So up here, let me just pick up on that because it ended up being an important level. If we pick up on Friday's highs, we did see, I thought, a strong finish to the week last week. We saw the market under pressure for a bit of it, but then over the last couple of days, we saw the market come back and we closed up here. It looked like a strong close on Friday. Then we had trade war, tariffs, all that stuff over the weekend, and bang, we saw a much weaker start to Asian trade on Sunday night. Sold off really heavily. I did end up trying to buy it here and got stopped out on the way down. The market did turn around on Tuesday. So we did have a bit of a turnaround Tuesday. And since then, after this big sell-off on Monday, we've seen this market, the S&P 500 and other stock markets in a minute, try and build some sort of half decent recovery. But interestingly, the strength yesterday is about between 5 and 6 UK time. We did see that strength run out ahead of these old highs. So clearly 2890 to 2900 from last week is still proving to be a barrier. And that is a chunky old sell-off, really. 40 points or 30 points on the S&P since 5 o'clock last night. It is a big move, but I think it makes for an interesting day today. We had gone on the hourly RSI, we had gone overbought. When we were oversold earlier this week, that didn't work too badly. It took a bit of time to work back here on Monday, but we're heading into this afternoon. If we see much more of a drift in the S&P, maybe heading towards oversold again. So I think it's going to make for another interesting finish to the week. Let's pick up on the trend. I mean, I think because of what happened last weekend and because of the nerves around potential trade wars and tariffs at the moment, perhaps we won't see a strong finish. Perhaps people will be nervous about getting too aggressive on a Friday, having 2 days when the market's closed and anything could happen. But for now, the trend for this week is still up off these lows. So the level I would be watching going into this afternoon, I think there's one level we're on right away, but let's look at that in a bit more depth in a second. But I think this trend line for the week around about 28.30. But let's just flip this over to a 5-minute chart, because we are from yesterday. Yesterday I thought was a bit of an odd one because right from the open, so the official open 2:30 UK time, so whatever time that is in New York, 9:30 New York, it just went up. Yeah, so this is the official open, and then bang 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 bang. These are 5-minute candles. Away we go. For 3 hours, the best part of 3 hours, the market just went up, and we're giving it all back now. And I think this is, for me, if we're still trading around here when the market's open this afternoon, it's going to be interesting because we're sort of drifting back to the lows, 28.55 ish, 28.57 lows. So let's watch those. So for me, I would be expecting a bounce this afternoon. So, and for me, it's all about, well, where does the bounce come in? And that is the first level to watch. But I think these markets are still a little bit nervous. It doesn't really change that big picture. We don't forget, we did punch out to fresh all-time highs just end of April, beginning of this month. So it's still positive. I think if we start losing the bigger levels, the lows from late March, then we have the risk of a much deeper sell-off. Okay, so let's see. But for now, I'll be expecting it to have try and have a little squeeze higher this afternoon. Let's take a look at the Nasdaq. I'm guessing it's going to be similar sort of moves. There we go. So again, quite a big sell-off from those highs, 7850 down to what, 7250, near enough. So an 8% drop over the last few weeks or so. Much more volatility clearly in some of these tech stocks, but a similar sort of shape to the week. We've had a week of recovery. The lows for the Nasdaq look to be around about 7,500 from yesterday. The market in the out of hours market is currently 7,530. So again, waiting to see this afternoon when things start this afternoon. Can we push up off these yesterday's lows? Let's bring it back to Europe. Let's have a look at the what am I trying to look at? The German 30, the DAX. Here we go. So let's go on the dailies. So again, we've still got this recovery clearly off those December lows, still chugging along. So we're moving higher there. Big support left at 11.8 on the DAX, so 400 points away from where we're trading now. And again, if we flip it, the DAX had a heck of a move yesterday. And we think, a couple of days ago, where it had a move from 11.9 to 12,100 in the space of an hour or so. And again, going into this afternoon, it's going to be all about how these US markets perform, but watching the lows from maybe early yesterday afternoon around about 12,150. So these markets at the moment, if we looked at it in the context of the last few days, the weakness we're seeing over the last 12 hours or so just looks like a correction. So I'll be waiting to see if these markets can snap back, these stock markets can snap back. Let's see what happens. Okay, let's get into other markets. And of course, if there's any stuff you want looking at, if you just put it in the chat on the side of YouTube, we'll do it there. Let's take a look at maybe FX markets soon. First of all, the pound I am surprised by the amount of pound weakness we are seeing, but it is relentless. Let's flip this over. And again, just in the last hour, it is making new lows. Since January, this is the lowest the pound against the dollar has been since January. So I think I've said this has been a hard market to trade. I suppose if you've been short the last week, it's been a dream come true. What's driving the pound at the moment? I think it's got to be the political instability in the UK. We heard yesterday about Theresa May's Prime Minister's plans to quit. Boris Johnson, of course, throws his hat into the ring. We're not quite sure what's going to be happening. And again, I think all of this, we've got the European elections coming up in a week's time. So, plenty of uncertainty, political uncertainty for the UK, but it's still weak. It's still really weak. And I'm reluctant to say it, but if it's going to bounce from anywhere, then we're here. But it's showing no signs of doing it at the moment. I must admit, I did all right on the pound on the way up here, but I have been wrong-footed by it in the last couple of months, and I've not actually traded it that much. But we're back to these lows from mid-Feb. So Valentine's Day lows for the pound against the dollar. 127.70 is the low. We are currently 127.70. So here we are. I would not be a buyer today because this is a market that is still weak. But maybe it's an interesting one going into next week. We've got a bit of price action, spiky price action right at the beginning of the year. I can't believe we are back this low. So back to the lows from the second week of Jan, ahead of 127. So maybe we see some strength coming back in next week. Let's flip it over to the hourlies. Here we go. Look at that. So it's been just a perfect swan dive for the pound from just below 132 to now below 128 in the last couple of weeks or so. And it's still slipping. It's just relentless. Breaks to a new low and away it goes. Breaks overnight, has a little bit of sideways, and bang, breaks again this morning. So incredibly weak still. Me, ever the optimist, thinks maybe it'll snap back here, but let's come back to it on Monday and see where we are. But I think clearly the ongoing political pantomime that we have in the UK is not helping sentiment towards the pound. I think the euro is interesting down here, and I'm almost tempted to be a buyer. Famous last words. The euro down here. So we've had this slide since September, which has been pretty gradual, but the market has clearly moved lower. And if we picked up on the trend, maybe over how many months is this on euro US dollar? Let's have a look. Oh, for the year so far. So the year so far looks like this. You know, it traded as high as almost 116 in January, and we've been as low as almost 111 in May. And it keeps doing this. I've mentioned this a few times, where it breaks to a new low and then just rallies back. Did it again here, breaks to a new low, rallies back, and did it again in April. And at the moment, we are drifting off towards those new lows again. So for me, that big trend is still down for euro US dollar. Okay, so if we're going to be purists about this, which we should be looking for opportunities to sell short. Really, you should be looking for strength, maybe up towards 112.50, 113, sell short and go back for a retest of these old lows. So that's the bigger picture. But I think the short term look, I think why it's interesting. I mean, we have fallen out of this trend. It's been some quite scrappy moves over the last few weeks. But if we pick up on maybe the trend, if it looks something like that, it's falling out of the trend overnight. Was it overnight or yesterday afternoon? Starts falling out of that trend. And the question now, I think, is, well, is this actually the start of a new downtrend, or is it just going to chop sideways a bit and try and recover, but at a slower rate of knots? I mean, I don't know, but I think it's an interesting one down here, because we have quite a bit of support running for euro dollar from these lows, 111.65 through to 111.80. We've got a big sort of spiky support down at 111.40. So if you wanted to be really aggressive, I suppose that there is an argument for being a buyer and looking for these old support levels to hold. Yeah, looking for these old ones to hold, and the market to try and push its way back up to the 112s. And we don't have that much day-to-day volatility on euro US dollar, but I think it's an interesting market to watch down at these levels. Yeah, because it has just drifted, but we are back towards, you know, the lows for late April, early May are only about 25 points below where we are now. So will we see a bit of strength coming back? I have to say, I mean, I do maybe 3 or 4 trades a week, and I think the last couple of weeks, things in markets like the euro and the pound have not been as clear as they have been earlier this year. So maybe for your style of trading, it's worked fine. For my style of trading, I find it quite hard work, to be honest, with some of these markets. But let's see what happens with euro US dollar down at these levels. Let's get into some old favorites. So we'll have a look at oil. Oil has been, I did a trade earlier this week on oil, and that has worked out well so far. It's been, and it's really, for me, it comes back to these big levels. You know, longer term sufferers of these live streams will know I'm a big fan of looking at, you know, big levels in the market, where sentiment's turned around, all of that sort of stuff, and looking for these areas to place stop losses beyond. We had this run in oil up to 66 and a bit, 66 and a half. The market sells off, comes back to $60, pretty much $60.07, May the 6th. And since then, we've been pretty sideways, but that trend for me is still up. We haven't really taken out, okay, it's fallen out the trend line, but we haven't really taken out any major lows. It went oversold on the daily RSI 5th of May, and the next day is when we see the $60 level hold. Let's flip it over to an hourly. But for me, you know, where the opportunity has been, and again, I've had to be patient, but that's been the move to 60. That was the move to 60. It was the beginning of last week, and the market tries to break higher, gets to 63. And all this week, for me, I ended up buying, I think it was about 61.20. I think it was maybe in here. But really, just based off what the price was doing. So based off, well, the bias, I think, for the market, the bigger picture is still up. We've got big support at 60. So if I can buy it at 61 or something, I only need to stop $1 or $1.50 a barrel away. And we have seen it once again really try to push higher. And I think we're seeing a positive finish to the week for oil. 63 has been a problem for most of May, right? We rallied up to it 6th of May, rallied up again May the 13th, and turn around really quickly. So sellers up there at 63. But now we're holding up here, you know, so maybe now this move through 63 looks less like a false breakout, because we're seeing the price, famous last words, actually hold up there. So for me, if we're going to see further strength from here, the obvious target is a run back just shy of $65, the end of April levels, and then after that, perhaps another look at those highs for the year up at $66.50. So I think again it's been a bit scrappy last week. Oil, you know, it's no good just taking a punt, I think, and buying it in the middle, because you're in the middle of a sideways range. But when it moves to these extremes, I think there have been opportunities. But again, it's about being patient and waiting for the market to move. So going into next week, you know, I'm hoping that we'll see a breakthrough the highs from yesterday at 63.70 and bang, off we go. If we do see weakness from here, I'd be looking down here again, looking down for the low 60s, 61. See if we see the buyers come back in. You know, I think if we see it break below 60, then we are going to see, I think, a deeper sell-off, because clearly there are plenty of people who think, well, at the low 60s, oil still looks cheap. And I think if we see it break below 60, there'll be a lot of people, me included, who are wrong, and they'll be looking to get out. So I think that's really the medium-term sort of line in the sand. But at the moment, looking on the short-term chart over the last couple of days, we are seeing it sort of mildly positive up here and trying to build on this break through 63. Gold, I don't know, is it a frustrating market? I think it is a bit. I think I've been saying for a while, you know, I've got some longer term stuff on gold, just following these trends that started, that started back here, back in August last year from 1160. And we had lots of touches on this trend line, and bang, comes back to it again in early May when gold drifts to 1266. We had what looks like this correction going on since Feb. Let me pick up on that. Here we go. Let's pick up there. There we go. And I thought the move that we saw earlier this week, it was Monday this week, wasn't it? It was when markets were falling really hard, and gold was up, and gold was threatening 1300. And I thought, well, hey, here we go. This is the break. And off we go, back up to 1350. And this hasn't been the case. So far, we've seen it broke out and it sold off again. So, I mean, clearly, again, it's down to patience. We need to be patient and give the market maybe time to prove us right. But I think on this chart, you know, 1260 for me is still the big level. It's pretty much the trend line since August last year. It's the lows for the year, near enough. I would still be a buyer based on that, trying to take my bias out of the way because I am long. I'd still be a buyer, and looking next week, if we can push back up and regain the 1300s, I think we can see a much more interesting few months ahead for the price of gold, and maybe we continue to push higher and have a look at these old highs. If 1260 breaks, then I'm going to start getting out of the longer term stuff that I've got. But for now, it's been not the best of times if you've been a bull over the last 2-3 months, but that recovery just about holding in the price of gold. So let's see what happens. Let's flip it over to the hourlies and see what the hourlies look like. There we go. So we got, just before that surge on Monday of this week, you know, we've got lots of support running from 1276 lows through to 1280. So let's see what happens. But a little bit frustrating that it couldn't capitalize on this surge and has just drifted and given back all those gains, and we're pretty much where we were at the start of the week for gold. But I think we need to regain those 1300s, and I think that's it, isn't it? So I'll look at the stuff that's coming in, the questions that's coming in. So I think for me this afternoon, the most interesting market is stock markets. So here's the S&P again. So the S&P. So we are, at the moment at least, already seeing a bit of strength ahead of yesterday's lows, but this is in the overnight market. But going into this afternoon, let's have a look at the Dow, see what the Dow looks like on that. Here we go. Let's see what the corresponding one is for the Dow. So it's yeah, it is 25,700 near enough. So it was holding. Let me just zoom in a little bit. So 1240, 1 o'clock yesterday, then on the open, the official open. So 25.7, big level for the Dow. It has traded at 10:05, traded as low as 25,715. So I think that's the one, that's the first level to watch going into this afternoon, and seeing if we can stage some sort of recovery for these US markets. But let's take a look at some of the questions. So sterling against the Swiss franc is one that's coming in. Let's pick up on that. Let's bring that chart up. It looks, I mean, it's pretty similar, isn't it, to sterling against the dollar. So we've got these big levels coming in. It's still weak. You know, I mean, look at these red candles. I mean, we've had one up day since the 8th of May. You know, we've had one day where the market has not closed lower than where it opened. But other than that, it's just getting battered. So again, I think I'll be watching these old lows, you know, from 128 near enough, 128 to 128.50. So 50 to 100 points below where we are now. I think it's got the potential to be a really interesting week for the pound next week. I mean, presumably the political shenanigans is going to ratchet up, and we are getting back to lows from January. And if these break, perhaps it kicks off a whole wave of selling, or if they hold, perhaps we see sentiment really swing around. So I think next week could be a really interesting one for pound against the dollar, pound against the Swiss franc, pound against a whole load of stuff like here, because we are, you know, because it has been under so much pressure the last couple of weeks, and we're always used to political news breaking over the weekend, aren't we? So perhaps we'll have some political positioning coming over the weekend for the Tory leadership. So let's see what happens. Let's see where we are on Monday. But that pound against Swiss franc looking pretty much like pound against dollar, just weak, but big levels coming up. Sterling Aussie, sterling Australian dollar. What does that look like? I'm guessing not a million miles different. There we go. You could all, that's because that is the pound against the dollar. That's not the pound against the Aussie dollar. I wondered why it looked the same, because it was the same. Right, here's so sterling Aussie. So sterling Aussie hasn't been as weak, so that suggests that the Australian dollar has had a few weeks as well. So sterling Aussie, I mean, what would you do? I don't know. I mean, I think it's one of, I think this is, I don't know. I think at these, I mean, I like trying to trade stuff near major turning points, but I think I would have got chopped left, right, and center with this. Because look at it back in October, it looks like it's breaking out for these old highs, the pound against the Aussie dollar, and then it promptly reverses. Then it does a similar thing again here in March, and it's not quite, it did it for like half a day here. So it's almost like you get all these false breakouts, so fade the breakout. But I think at the moment, it's just stuck, isn't it? These are daily candles that we're looking at here. We're trading pretty much where we were a couple of weeks ago. Not far off. It's just choppy. It's just a choppy nothing market, nothing trend, I think. So I don't know. I suppose, I mean, an aggressive trade, be a buyer maybe of the pound against the Aussie with a stop underneath the lows from yesterday at 185. But it's just a little bit, it feels a little bit scrappy, doesn't it? Because it did try and break below these old lows and it's held. So maybe that's the aggressive trade there if we really wanted to trade it. And beyond meat, someone's saying, I've read about it, but I haven't looked at it. I don't think we've got it actually, but I'm going to bring it up on something else. Hold on a second. I don't think we've started covering it yet. That's the recent float, isn't it? That is the meat replacement thing or whatever it is. Hang on a second. Let's bring it up. Beyond meat. Here we go. Well, okay. How much data have we got on it? Okay, so it only came to the market back here, 2nd of May. Started trading at $46, and yesterday it's $92. There we go. What can you say? I don't know. I mean, you know, we're massive fans of trying to trade with the trend on these things, aren't we? That trend is up. So as usual, clearly we don't have much data. The thing's only been trading for a couple of weeks. Let's say, okay, the aggressive trade is broken through the highs from earlier in the month, 85, 86. So a bit of a mess around. Sells off yesterday, or whenever it was, 2 days ago, down to 80, and we finished off at 92. So for me, if I was going to do anything, I would, I suppose, be a buyer because it hit new highs since the float yesterday, and the closest I would want my stop. And in percentage terms, it's a long way away. It's it's more than 10% away for a short-term trade, but it's only below the lows from Wednesday. The other side at 80. Yeah, so that's what I would do with that one. But clearly, I mean, what a fantastic debut, particularly when you let's have a look at Uber. When you compare it to the likes of Uber, how is that one doing at the moment? Which came to the market last Friday. Oh, that's interesting. Uber, I mean, I'm never a fan of these ones when they've just started trading, but Uber could be interesting. We've seen it touched $36 earlier this week, and it's back up to what, 42, 44 yesterday. The highs, its float price, its IPO price was of course $45, and it couldn't break that on the first day of trading. So it'll be interesting to see how Uber performs this afternoon. If it broke 45, I'd be tempted to think about maybe looking to buy. But arguably, Uber is a short going into this afternoon, because 45 was the highs from last Friday, IPO day, and also it was the IPO price. So it's quite a big psychological level, 45. Let's see how that works out. But that's it. We'll wrap things up there. I think there's no more questions, so we're all done. As usual, any questions, you can drop me an email, david.jones@capital.com. You can follow me on Twitter @JonesTheMarkets. To never miss out on alerts and stuff, just subscribe to the channel by clicking subscribe and the alarm bell thing. And I think, stock markets look like the ones to watch for today. We'll come back to this on Monday at 10 o'clock. And I think next week, it could be an interesting one for the pound next week, because we are hurtling towards these big levels left from earlier in the year. But today, I think for me, it's all about stock markets. That's it. Have a good weekend, everybody, and hopefully see you on Monday.